Hey guys, Gregory Joseph here. Welcome back to Wall Street Weatherman. It's so cool to see you. And I wanted to make a short video today about how much I love cash. I know, right? I'm not being hyperbolic and everyone loves cash. I'm talking about as a trading position, the freedom that cash gives you, the optionality that cash gives you, and the ability to take advantage of timing. It is incredibly important. And right now, the market is stalled. We've talked about the last couple of videos. We were looking at, okay, wait a minute. The tech trade, the AI trade has started to waver, to, wiggle and falter a little bit. Well, guess what? That's absolutely confirmed. The momentum is out of the technology trade, and the rotation from that technology trade into some of the other sectors, 11 different sectors, know your 11 sectors, that rotation into things like financials, the banks, into healthcare, even into some industrial plays. That rotation is it that's uncertain as well. So overall in the market, there's end of the year uncertainty, there's some rotational uncertainty, weakness in what has been the biggest momentum trade year to date. And so right now, I see questions in the market. And at times like this, I like to trim my positions, maybe even liquidate my positions in my trading portfolio and go into cash. Because what is the first rule of what we talked about? The first rule of investing: before you think about making your money, rule number one, do not lose your money. Okay, before we even go out there and get excited, and we do not lose our money, we protect it. Nothing protects money better than cash. And right now in this uncertain market, I am taking great solace, great comfort in having that optionality and protecting my money. So, and with that in mind, I just want to say that before, we've talked about I have Schwab as a brokerage, and that's where I have the investment part of my overall portfolio. But for the trading portion of my portfolio, I've got it in a different brokerage, which it's in, and this is not paid. This is I'm not being paid for this. I've got it in Robinhood. Okay. The reason why is because, unlike Schwab, there are brokerages like Robinhood, like Interactive Brokers, which is another great platform, and some others as well, where when you have a cash position, they will pay you interest on whatever portion of that you've got sitting in cash while you're waiting to trade. While you're in and out of trades, you can make money with that cash. Right now, it's based off of the federal funds rate, which is the overnight lending rate between banks, minus a little bit because, the brokerages need to keep the lights on, and I'm cool with that because right now it's paying 3.5%, 4%, which is fantastic. I look at it like a free dividend, and it also gives me even a little more comfort when I've got that cash and I'm waiting for moves in the market to really confirm before I put risk on. I'm making that extra 3.5%, 4%, which is fantastic. So go check out some of those brokerages. Again, not paid, but Robinhood is wonderful. Interactive Brokers is a little more geared toward professional institutional traders. They've got incredible tools on there, but you can pay for those tools as well. May cost a little bit more, and there are others. So go check that out. But investing, I'm cool with my one brokerage, the trading portion of it. Absolutely, that cash on the sidelines has to be making money. So please put that to use. Nothing like sitting there and just waiting for, not feeling the pressure to be risk on. and at the same time making a good, solid return. I mean, it's like a free dividend, right? It's crazy. So the you know the biggest thing about cash, we've talked about it, and I just talked, that it gives you that those options. It gives you the choices. You don't have to just be on the market, risk on. You can have that on the sidelines at a time like this when, again, end of the year, you've got a lot of different reasons that people are buying and selling or not. The volume in the market can be low because of all the holidays, and people go on vacation, they go on holiday, and that pulls volume out of the market. And you know how much I like strong volume, because strong volume gives you a very accurate, going back to when I got my economics degree, the statistics classes were invaluable. And so big volume gives real, like, very accurate, results to what the market is doing. So very reliable. You've got some of that light volume at the end of the year. You've got tax loss harvesting, which is when people or institutions will look at their overall portfolio and say, okay, here are my gains, but I've got these losses that I've been thinking about, selling these stocks anyhow. I can sell these this year and take a capital gains loss, which then will offset the taxes I have to pay on my gains. So that's a strategy as well. And what is it people always say? Go consult a tax professional, and so go and do that. But very simple. At the end of the year, some people are selling their dogs to offset what they have to pay for their winners. And then there's stuff like, we've talked about the the chatter every year about, oh, the Santa Claus rally and the momentum and this in December, and which I don't subscribe to. I study and absolutely listen to, but lots of different things going on right now. That tech trade has, the momentum has broken in that, with all the questions about the return on investment, that hundreds of billions of dollars that are being invested into the data centers. Go back and look at those videos. But the momentum in the tech trade has broken. And again, the rotation into these other sectors is uncertain. But let's just distill that down to the essence. Throughout this year, 2025, that tech trade, the technology stocks and everything around it, have contributed to 60% of the return to date in the S&P 500. In the overall market, 60% of the gains have come from technology. So at a time like this, when it's in question, I absolutely am not guessing. I'm not guessing. I'm waiting for confirmation to me about, is that rotation happening? Or, like so many times before, not just this year, but previous years, the knee-jerk reaction for good cause, where the money will try to find somewhere else to go, but come back to that technology trade, because it is incredible, the revenue, the cash flows of these companies all across, not only the largest of the large, but we are moving more and more into that world of technology. And so the returns there are incredible and real, and generate incredible amounts of cash. And so is that going to happen? Are we going to snap back to that tech trade, to that knee-jerk reaction? Who knows? But right now, I feel great. I've got my trading portion overweight in cash. I still have some trades on, but definitely I've got a very large cash position. I'm making great money on that. And I remember and I know that some of you have heard this, but the ice hockey star, Wayne Gretzky, used to say, don't skate to where the puck is, skate to where the puck is going, right? Everyone is over there, the crowd's over there, they're huddling around the puck. Look for the open ice, skate over there, and it's okay to wait. Do your research now. Get that list together of, if the market goes in this direction, these are going to be my trades. If it goes back in this direction, I want to start looking at all those great sell-offs that have happened in really quality companies, um, and go, skate to that open ice and be ready for it. So I always thought that was a great analogy. But the cash is, this is the reason why I love cash, and this is the end of the video. Just summarizing that, it gives you the options. It gives you the flexibility to be out, but to be ready to get back in when it happens. And let's face it, trading these days is happening so quickly. As I've said before, don't try to be the first one in. Don't try to chase like the beat the timing of the market, because the computers will always, the algorithms will beat you to it. So that's not what I'm talking about. But I am talking about how quickly things can trade these days. So having that cash, having the choices and the options feels fantastic. I'm ready to go. I'm spending time doing my homework, drilling down on everything, that if the A happens, I'll go this way, B, I'll go that way. And in the meantime, I'm making that sweet 3.5%, 4% on my money. So there you go, guys. Cash is king. We love cash. I hope this has been helpful. And as always, all content herein and information, views expressed, are informational only and not advice to buy or sell any stock or equity. So thank you for joining me today. I hope this has really been helpful, and I will be back soon. I know that something is absolutely coming soon, and I'm keeping track of it. But like always, I'm not just putting out the videos just, for the cadence of it. I really want to be here when something important happens. And right now, the most important thing is, for me, is to be comfortable and be confident, sitting, as we say, sitting on our hands, not making those active trades, and preparing and being ready for what's going to happen next. Thanks for watching Wall Street Weatherman, guys. I'll see you again soon. Cheers.